Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us this morning to talk financial markets. Scott, welcome. The dollar, thanks to you, the dollar into the end of last week, taking out the August lows, not what the bulls wanted to see to begin the month of December. I'm wondering, is there any solace to be had in the fact that, well, follow through as of yet has been somewhat limited?
I really think there is, Ben, because if you look at a chart of the dollar, if you go back to the middle of May and then the middle of June, 104.5 was some pretty big resistance. After we broke through that area and rocketed, all the way up to where we did, that area now has held as support. We hit that, late last week. So that's a critical area for me from a technical standpoint, this 104.5 area. And, if it breaks there, which I don't see that happening, but if it breaks there, we could see it down to 102 or so. But I really think it holds. I mean, the dollar fell, about 1.5% last week. The month of November, it was down about 5%, which was its worst month since 2010. But I think, as you and I have discussed before, so much of that catch up of other currencies has now happened. I think that stabilizes the dollar.
Well, as you say that, Scott, what comes to mind, if we could pull this chart again here, because we're looking at the U.S. dollar, and it is, again, at this key level, to your point, taking out that 104 handle, but limited in terms of follow-through, but to the August lows. But as I look at this, maybe getting a little bit of ahead of itself, because look at where rates are right now. I mean, nowhere near the August lows. The TNX, that'd be around 2.5. Yeah. We're at 3.5, just off 4.3. But here's a look at what I was talking about earlier in the show, and I like you bring to our attention. Again, I'm sometimes wondering, is it the tail that wags the dog? Or in this instance, well, it looks to me like we could break down some of these individual currencies. I mean, just zooming in on the British pound from 104, 103.92 up to 123, quite the recovery there after, a turmoil into the end of September. I mean, there was a lot of uncertainty, but you can see it's recovered significantly. That's going to weigh on the dollar.
Absolutely. And the euro also just at 105, its highest level in about 6 months or so. We've seen the yen recover. But again, that's exactly what I'm talking about, where we saw for so long the lag of other currencies compared to the dollar. And I think that we have now seen that, come back to, I don't want to say parity, but I think we've seen that come back into line a little bit here.
Let's just quickly take a look at the yen as well, if we could. This is the euro currency. Let me just flip on over. Here's the yen. Again, three of these currencies. We'll just bring this tri-chart together again so we can look at all three collectively. Scott, as you say that, I kind of reminded the fact that, okay, the other thing is it seems like, well, inflation seems to be easing here in the U.S., but not necessarily in Europe.
Not at all. Not at all. You're right. And again, it almost seems like there's this lag, I don't know, 3, 6 month, 9 month lag in Europe, in Asia from what we have seen here. But, our economy here, we are still humming along. Yesterday was another report, that ISM report, showing, some considerable strength. And we're in this period right now that good news for the economy is bad news for inflation, bad news for the markets, and we saw that yesterday.
Scott, talk to us in terms of what we should be watching for as far as rates as we're waiting for the Fed announcement, obviously. I mean, it does seem like we've kind of settled into a range. The idea of actually getting down to the August lows, as I just pointed to, 2.5 seems a little bit far-fetched, but hanging out right around this 3.5 level rate seem to be pretty comfortable for the most part in the middle or in a fairly well-defined upper and a fairly well-defined lower extreme here.
Absolutely does. And what is actually, I think the most interesting thing is the inversion that we're looking at that keeps grinding higher. I mean, the 210 yesterday went to 81 basis points or so.
So it's still going.
It is still going. And that's while, with the 10, like you said, kind of hovering in this range, being comfortable in this range. But the 2-year, which dropped considerably last week, gained almost all of it back yesterday.
Yeah, we're looking at that right now. That does continue. Let's just pull this up here. This is the 2-year, the micro contract. You can see recently up to, well, just shy of 4.8. Look at that. Has come off a little bit, but nowhere near the extent in terms of what we've been seeing as far as the TNX. Scott, probably not the biggest deal. I just real quick want to take a look at these export numbers that just came across the wire here. How much attention will this get?
I mean, a little bit. I think what was very interesting, though, talking about import and export, was overnight in Australia, and this had to do with the RBA as well. their exports were down considerably, and most of their exports go to China. So with the slowdown in China, the RBA just announced last night that their exports were, I don't even know if it was the lowest in years or what it was, but much lower than expected, even though they raised rates. But here, our export and import, I don't think it's much really to take a look at. I don't think it's going to affect the market at all.
I did see that tomorrow Australia is also going to have third quarter GDP numbers headed our way. Yep. So, and we mentioned earlier in the show the rate hike that we saw. Scott, talk to us about what's going on with Bitcoin. There's now a lot of regulatory discussions. There's talk of obviously the focus still on this recent bankruptcy, or a couple bankruptcies, I guess it was. But for the most part, price continues to hang in there pretty well, right around 17,000. As I look, we're up about 0.75%. No real meltdown there.
The bulls have to be ecstatic with this, Ben.
Yeah.
There's no question about it. And I actually saw a blurb this morning. I don't know how much is really behind it, that Goldman Sachs is starting to look into some of the FTX distressed assets, if you will, trying to pick up some of the pieces there that they may try and get into that. I don't know if that's just more of trying to cherry pick an absolute bottom in something, or if that's a longer term plan of theirs. But again, hanging in this range here, I think is pretty incredible. From what Howard Greenberg tells me, our crypto guy, 17.5 is really the big number here. It's failed there a couple times. Okay. That's going to be the big number to see if we can break through that to get any sort of follow through on this rally that we've had a little bit.
Yeah, still in a well-defined range right here. As we look at it, you can see a narrow range at that and a well-defined trend to the downside. Scott, before we let you get out of here, a focal points into the middle and throughout into the end of the week. Obviously, PPI front and center come Friday, but what are you dialed in on in between now and then?
It's really PPI. I think we're going to grind, Ben. Yesterday was a surprise to me that we saw that big of a move. I would have expected this entire week to be just very choppy. Not a lot of movement here, but seeing, S&P is down 80 points was quite a bit. But I think Friday is the focus, but the bigger focus is on CPI next week, and then obviously what the Fed does.
It does seem like we're waiting for the Fed, for CPI, obviously, and there still seems to be this holiday vibe kind of lingering right now, but lots to keep an eye on here. Scott, we appreciate you joining us here to break it down, talk financial markets. Scott Bauer, the CEO of Prosper Trading Academy.